Hey, what's going on guys? Welcome back to my channel. So first of all, I would like to express my gratitude towards you guys who clicked on this video. Thank you. As you guys already can see that the title of this video is investing versus trading. So today, obviously, we're going to talk about investing versus trading, and let's get right into the video. And before I even start off, I am no financial advisor. I would just like to clarify that. So just take all of my videos as an entertainment and never take me seriously, because I'm just a 19-year-old who likes to do finance videos. Right, so if you take a look at the definition between investing and trading, they all kind of sound the same because they both profit from the stock market. So in this video, I would like to help you guys to know the differences between trading and investing with the help of my YouTube assistant. So this is his first day of the job, so I hope you guys wouldn't flame him in the comments for the mistakes he make. Hopefully he doesn't do any mistakes. So without further ado, let's just dive right into the details. What is investing? I wonder too. So investing in general is by seeking larger sum of profits in an extended period of time by buying and holding. Trading, in contrast, is by taking advantages of the short-term market's fluctuations by entering or exiting the market with strategies, thus making smaller profits but more frequent profits compared to investing. So the key takeaway here is that investing is a very passive type of income, and it's a very long-term type of investment. So long-term means years, decades, or even centuries if you're able to live long enough. And trading involves strategies to maximize your daily, monthly, or quarterly profits. In other words, investing is all about time in the market, while trading is all about timing the market. So for me personally, I would prefer investing, and if you want to know why, just stick around in this video to find out. So the goal of investing is building a wealth over a period of time by holding stocks, mutual funds, bonds, and whatnot. But normally, investors would enhance their profits through compounding interests or reinvesting their dividends back into the stocks over a period of time. Investors may be content with the returns of up to 10 to 15%. As mentioned earlier, an investment are often held over the years, decades, or even centuries if you're able to live that long to take advantages of the stock splits, dividends, and compounding interest over the period of time. While the market fluctuates, investors would hold on to their stocks with the expectations of the market recovering from the downtrends in the short term. Thus, in the long term, they would still be making a profit. And what I do normally in the downtrends is that I like to buy in even more because I get to dollar cost average at a lower price, and definitely stocks only go up.
Stocks only go up.
Investors are typically more concerned about the market fundamentals compared to traders, because some traders are trading the company stocks without even knowing what the company does sometimes. So trading involves much more transactions, such as buying currency pairs, stocks, commodities, and whatnot. Traders might seek up to 10% return every month. They profit from buying low and selling high, and of course, with more return, you get more risk. For beginner, I would definitely not recommend you guys to do that, because you would just blow all your money down the drain in just 2 seconds. Trading is an active source of income, while investing is a passive source of income and can still make money in your sleep. So that's the reason why I said that investing is one of my favorites, and I would continue investing in the long run. While investors wait out in their less profitable positions, traders make their profits in a specific amount of time with a stop loss to protect them from losing too much of money. Traders often employ technical analysis tools such as moving averages and stochastic oscillators to find high probability trading setups. It's like a formula they apply to a math question to solve the problem. If they're able to secure the bag, then they got the problem solved. As easy as it sounds to be a trader, it comes with a very high risk in return. So definitely for the beginners who are out there who is interested, I advise you guys to go into investing and understand the stock market a little better before you even go into trading, so you don't lose all your money overnight and cry like a baby at night. Let's have a recap before we end this video. Trading involves short-term use to maximize its profits, trades currency pairs, stocks, and commodities, and higher risk, and is an active income. While investing is building your wealth over a period of time, investing into stocks, bonds, mutual funds, and whatnot. Investors also enhance their profit through reinvesting dividends and compounding interests. And of course, investing is a long-term and a lower risk type of income you can build in your earlier years. So with all of that being said, I hope you guys understand all my explanation throughout this video. If you guys have made it this far, let me know down in the comments below whether if you prefer trading or investing, and I will see you guys in the next video.